Hey TGO traders, Matt Wiz Buckley, the primary model portfolio manager here at TGO, and I wanted to get out a trade alert on GLD. Now we hit GLD pretty hard in our live trade brief this morning, and I wanted to put out a trade alert based specifically on gold and based on our strategic mindset. What's going on in the world, folks? Well, obviously, it's an absolute clown car. We have Greece potentially exiting the Eurozone, mainly because they voted in some high schoolers who don't want to grow up and pay their debts. Same thing happened with Sarkozy in France. He lost. So the only grown-ups really left running around Europe, so to speak, and this is kind of creepy, are the Germans. Angela Merkel, she is trying to keep the Eurozone together and keep it paying its bills. It's probably not going to happen. I predict that the Eurozone is going to break up in about 3 to 5 years, if not sooner. What's this have to do with gold? Well, more importantly, what's this have to do with the U.S. dollar? Gold has been, for the past, 9 days, as the market's been, slowly having a death by 1,000 cuts. Let's take a look at the 20-day chart here. Gold has been on kind of a slide for life. Why? People are flying to safety, so to speak, to use market terminology. The dollar is a flight to safety, and the more people that jump into greenbacks, the less people have, or they actually use this precious metal to stock up on dollars. And since the market actually is kind of not doing so well for the past 10 days, people are actually dumping their gold positions to meet margin calls as well. However, this dollar breakout, in my opinion, is going to be short-lived. When people figure out, take California example, absolute clown car. Instead of, $7 billion in debt, Governor Moonbeam now announces that they're $16 billion in debt. And he's begging voters for a, quote, temporary tax increase. If you believe that, I got a bridge to sell you. It's not going to happen. So California is a train wreck. Illinois is probably next. My great home state of New Jersey is probably in the top 3. We have our own Greece, Italy, and Spain to deal with in the United States. So the greenback is not going to be the flight to safety that it once was. The world will realize that precious metals are when the balloon goes up, so to speak, the only thing that people are going to be using is probably gold. So that's kind of our strategic mindset. Gold's had a pullback, a pretty significant pullback, and we're going to use this as an opportunity to get into a trade. Well, let's take a look at a longer-term picture of, or a longer-term chart of gold, and let's take a look specifically at the 150 level. When's the last time we saw the 150 level, which we're currently at, with the GLD, the Spider Gold Shares ETF? Look at that. Back in 2011, end of 2011. And that was a bottom. The last time, before that time, that we saw 150 on the GLD was to the upside, right? July. This is when the train wreck happened, right? AAA credit rating, gone. Europe, you can't get a budget deal passed here in the United States. Complete embarrassment. And a huge spike in gold. Gold's very cyclical, as you can tell. Up, down, up, down. We believe that 150 is probably going to be a bottom here. That this flight to the dollar is not necessarily short-lived, but it's not going to be as pronounced and sustained over these summer months. It's probably going to channel sideways off this bottom here. So there's our strategic mindset and our commit criteria. We believe that the dollar breakout is not going to be sustained. The market was up about 28 points today. It's already lagging off here. So people might be flocking to dollars a little bit, but we do not believe that gold's got too much farther to the downside. So with that as our strategic mindset and our commit criteria, let's take a look at potential trade. I'm looking at June options, and we're looking on laying on another iron condor. We had 2 that were extremely profitable, one that's hanging on the edge of profitability that we're probably going to have to adjust. But let's take a look at this. on our TradeMonster platform, and you can go to trademonster.com/TGO to open a free paper trading account. We hit create spread, iron condor, and up will pop. It'll auto-populate some legs, but it's obviously not going to be the legs I want, so I just hit edit right away here. So add edit legs, and the iron condor that I'm looking at is the 148, 144. So buying the 144 as a hedge, puts, and selling the 148s as our short strike. This is called a what? A bull put spread. And we're going to do 20 of these. Then on top, on the call side, we're going to sell the 156 calls as our short strike and buy the 160s as our hedge to the upside. We're always hedged, folks. Never doing anything naked at Top Gun Options. And we're doing 20 of them. Why? Well, let's create an order. So there's our iron condor, and let's go mid-market here, around 154, and analyze it. Let's see what our probabilities look like here. The probability for maximum profit is about 40%, and we'd collect $3,000 if that happens. The potential for max loss is just underneath our trading rules of engagement for the primary model portfolio, where we will never risk more than 5% on any one trade in our model portfolio, unless for some reason we have a good reason to deviate. So comfortable with the max loss of $5,000 there. And our break-evens. Gold getting down to the mid-140s. Yikes, something is really bad's going on. Climbing and having a huge rally between now and June expiration, not likely to happen. So let's create this order. I like it. We're going to let this one fly down range. Let's do it at 153. We're going to confirm that and add this to our primary trade alert model portfolio. So collecting about $3,000. I'm going to send that one, and that's going to be our dollar hedge. That this flight to safety to the dollar is probably going to end here after the world realizes that the world isn't going to end, that we've been through these Eurozone summers repeatedly, and it's the same movie. World's going to end, no it's not, and we move forward. Okay? So there's the trade. It's an iron condor on GLD in June. It's the 144, 148 bull put spread, and on top is the 156, 160 bear call spread. That makes up what we call a tactic, the iron condor. And we're doing that 20 times based on our risk management for $1.53. So there we go. GLD Iron Condor. Stay tuned for more trade alerts as we go through expiration week this week and manage the primary model portfolio, which is looking pretty good so far. Have some borderline folks that we're going to have to keep an eye on, such as Amazon, and GLD. A May GLD trade we're probably going to have to manage. But this is our new trade alert for the primary trade alert model portfolio. Happy hunting. Make sure you hedge.